They sort of look at the world. You're looking at cultural values, you're looking at systems, you're looking at individuals and sort of how those three things interconnect. And so when you're looking to evolve a system, you're looking at all three simultaneously. So you're looking at how are the values trending? What's the future? Where are values moving towards? And you're looking at, the monetary system and how can things change?
Welcome, everybody, back to Resolve Riffs. Today with another very interesting guest, Jordan MacLeod. We met over X/Twitter. I guess we became Twitter buddies, year or two ago. But many of you will know him as the author of New Currency, How Money Changes the World as We Know It. And you published this book in 2009. So it was just after the global financial crisis and almost exactly the same time that the famous Satoshi unveiled his white paper and launched, I guess, Bitcoin. And so I guess you guys were both rethinking the fiscal and monetary system architecture around the same time. But I guess before we get into any of that, maybe give us a little bit about your intellectual background. What led you to this point where you were publishing books on how to digitize or revolutionize the global monetary system in 2009.
Wow. That's a long story, but try to make it pretty short. Um, First job out of university, my background was economics. I was managing consulting in Chicago, and was actually working with this think tank that were identifying global trends and the future. All the convergence of problems that were going to happen around this time, frankly, 20 years from now. With the demographic problem, um, the growing debt problem, um, terrorism, global security, all of these issues were pretty well identified at the time. Um, and it really became clear to me that that's the path that I wanted to follow. And, I really began to think that money was the leverage point for how to revision the economic system and how we could start to begin to shift some of these trends that were moving in the wrong way. And Doomberg, a couple of weeks ago, did a great job, I think, identifying a lot of those trends with respect to China and the rest of the world. Things seem to be drifting away from the West without any sort of sense of control or understanding of where we're going. I worked in banking for a while in the UK and did some research on money and the evolution of money at the University of Economics in Prague, the Czech Republic. And then actually went into sculpture and became a really big fan of Joseph Beuys. When I went into sculpture and studying art, I actually hadn't made the connection. I just really felt like I wanted to create and build stuff, make stuff. But I actually learned that, one of the central artists of the 20th century really thought that money was the center for social sculpture. And he really thought that money, like the way art was moving, it was really from, sort of the whole, you could say like the Monets and the Impressionists have sort of mastered a sense of wholeness that other artists haven't. And that led to fragmentation and cubism. And he really thought that the holistic sense was going to art was going to basically take over the reality because it just, being on canvas wasn't enough. It wasn't satisfying. And so through him, I really began to reconcile the two, the art and the finance. And that's, I actually did a lot of the writing of the book at the Art Institute of Chicago while I was doing a senior sculpture studio. And it was kind of a melding of those two worlds. And then the financial crisis hit, as you mentioned, and I predicted that decentralized currencies would happen before I had heard about Bitcoin. Just simply, we knew that was the way it was trending, and it's just the general trend of human evolution is moving towards more distributed power centers, and I think money is really central to how that story is told. So it really can anchor new values into the world.
Okay, so let's maybe start in 2006, 2007. I'm assuming that many of the ideas in the book were coalescing around that time. And um, I hope I'm not overstepping and suggesting that maybe the events of 2008 um, created enough of a sort of emotional impetus or crucible, perhaps. Maybe it was a perfect case study for some of the ideas that were already coming together for you. But how did 2008 motivate or accelerate the urgency you were feeling to document some of your frameworks and how to think about money and how money was going to have to evolve in the wake of 2008?
That's a great question, and I mean, you were obviously there. I think 2008, there was a real sense of it was a really scary feeling, in the sense that we nobody really knew what was going to happen, whether things were going to hold together, um, and it just yeah, it really was a huge impetus to. I was writing 24/7, just trying to get everything, just try to leave it on the field. You have no idea where things are going to go. You feel like, okay, like this is my opportunity to leave it on the field, and who knows where the world's going to head. And I think a lot of people at that time would be surprised at how things have evolved since. That really things haven't changed very much, and like this kind of illusion has reappeared that everything's okay. And but I mean, I'm not sure I'm answering your question, but that is exactly it. It was the belief that we are evolving, and there's this opportunity right now to evolve. And so it's like, how can I convey it in my own words how to do that? And it's I think there's only so many ways that you can things can improve, and so you're really looking for those leverage points in the system that can actually bring about a qualitative change in the dynamics. And so that's what I tried to explain and to identify, and money being really central to that story for sure.
So, were you expecting 2008 to lead to some navel gazing and genuine material rethinking of the monetary system, the banking sector, the fiscal promises, the social
Yeah.
contract? And then were you surprised how effectively um, quantitative easing allowed governments to sort of kick the can as long as they were able to and avoid having to face some of these harder uh, challenges and implement some of these major changes?
Yes. I mean, I absolutely underestimated the ability. And I think Jim Rickards really got it right when he really thought this financial crisis was just pushing it up to the next level of the system. And it really became a fiscal global debt crisis. And I think he's been proven right, or he's about to be proven right. But yeah, I was absolutely surprised. I think, and even I think that would even reflect in how I was investing and thinking, underestimated the absolute boom that in asset prices, um, both in real estate and financial assets. You know, definitely took me a little while to realize that okay, this is never they're never going to allow that to happen. Deflation's not happening. So yeah, I think once you see that they're committed to that at all costs, then it changes your entire investment worldview. But for sure, like I would say 2010, 2011, I didn't see it coming to that extent. And I was still optimistic as well about, the potential for some kind of a global rebalancing in terms of, a new economic framework, a monetary framework. The
Mhm.
Chinese had proposed one in 2010, and then they were very serious about it. And I actually had more hope for Obama to address these issues head on rather than kind of allow things to drift the way they have.
Mhm.
And we've seen the rise of China, um, and sort of us sleepwalking into whatever's coming next without really any sense of empowerment to what's happening. So
So in 2009, what were you
yeah.
seeing had the potential to take shape that you were, I guess, maybe advocating for, or at least providing some descriptive framework of in the book, The New Currency?
Well, I mean, it's sort of one of the things that I like to use is like integral theory, which was developed by Ken Wilber, and Don Beck is another proponent of that. And, they sort of look at the world. You're looking at cultural values, you're looking at systems, you're looking at individuals, and sort of how those three things interconnect. And so when you're looking to, evolve a system, you're looking at all three simultaneously. So you're looking at, how are the values trending? What's the future? Where are values moving towards? And you're looking at, the monetary system, and how can things change? And so we went through it with the Great Depression. Um, in a sense, everything that we've built is to avoid a Great Depression. Um, and one of the solutions was developed by Irving Fisher at Yale, one of the leading economists of the early 20th century at Yale. And he basically implemented Silvio Gazelle's Demurrage. And so he really believed that what effectively is a negative interest rate, but not quite, right? It's something where it allows a countercyclical internalizing a countercyclical measure to money. So you're internalizing the cost of the money system. You get the money to flow without having to use all this exogenous inputs like Keynesian spending to make it work. And so eventually we've really just built this sort of, I like to call it like a fusion reactor that's still plugged into the wall. We have all these economists who like, talk up the numbers, full employment, GD, we have all this growth. And then, you realize that the 2 trillion in debt, is really just the equivalent of this exogenous input that's keeping it all going. And if you plug that, then everything collapses. So we're trying to create a self-organizing economy that, really can self-regenerate, and you're not just sort of continuously fragile to that kind of a dependence.
So
So,
Fisher envisioned a um, sort of a self-regulating system, did he? Where a material slowdown in economic growth would drive the borrowing costs of governments to be negative. Maybe explain what you mean by
well,
demurrage, because we obviously did see negative interest rates, for example,
right,
in a substantial portion of global sovereign debt markets, right? So how is what
exactly.
you're describing different from that?
So I mean, basically, you have to go back to the Great Depression. You have 40% unemployment. He predicted that if you employed demurrage, it would basically reverse the depression in a matter of weeks.
So
And we
maybe
saw that.
define demurrage for listeners.
I'm going to tell you a story about in Austria. There was a town of Vorgel that adopted this policy, and basically they had a they were basically the town was effectively insolvent. I think they had 500 shillings in their bank, and didn't have the means to pay for city wages, and so they essentially put a demurrage fee on top of the money. So it's a holding tax, and it's called a stamp script where it expired at a certain date. And so people had an incentive to use the money, to spend it before it expired. And so what that does is it creates a natural velocity to money, which is of course a function of the money supply as well. And so it's sort of an internal regenerative system that allows the money to circulate without any kind of need for um, years of, it could be years of economic um, healing, or it could be, massive debt to sort of spending, like to regenerate. So it effectively, within a matter of weeks, the town was fully employed. People were paying their taxes early, and so it became the miracle of Wordle. So there's like this historical case study of how this actually worked. And he was fascinated by that, and made attempts to implement this at Treasury and also in decentralized, sort of in towns as case studies as well. And people often think that he was only interested in this sort of regional local development where, a town might adopt this kind of a system, but he was very much thought it could be implemented at Treasury or at the Federal Reserve, where you have this sort of a tax on money, or a expiry date on money that allows things to circulate. So you don't need the central spending. So people think of it as an extra tax on top of other taxes, but in reality, you're saving a ton of money on the fiscal side because you don't need to spend all the money to push the string, keep the economy moving. And
Yeah,
it
it's a
is an
really
arbitrage.
interesting dimension because of, my sense is, and maybe you can correct me if I'm wrong, but my understanding is that the central banks of the world under the sort of neoclassical framework that we've been operating under for the last couple of decades, um, they use a small amount of inflation to try to incentivize um, the velocity of money, right? People
Yeah.
to spend now because it will be more expensive in the future, for example, right? So that is a tool of monetary policy or economic policy that we use to continue to sort of try to stimulate demand. Um, Inflation then is effectively a tax on consumption. I guess demurrage would be more of one way to think of it as a tax on wealth, right? Um, because you're sort of incentivizing people to not hoard wealth, but rather to put it to use either through consumption or investment.
Yeah. So there's a belief right now that we can't afford like a price stable currency. We can't afford to anchor to CPI or to have 0% inflation. And a part of that is um, connected to, it's sort of this belief that there's nothing you can do to counterbalance deflation and deflationary spirals. That's something that is it Warfels at Michigan. He's a Democrat, but he was very opposed to Judy Shell being nominated at the Federal Reserve because she's such a proponent of price stability. So if you think about, if you have a price stable currency, so you have zero inflation, then you can internalize some of the cost of the money system onto money and charge a fee on top of that. And so that's essentially like an inflation, but you can have price stability throughout time if you do it this way. And so that allows trade balances, global trade to function much more smoothly. And it's not arbitrary because there actually are real costs to people holding money. The U.S. spends close to $1 trillion on maintaining the rule based international order. And so, if you start to think about all of the wealth that's protected, that really doesn't pay anything for the security that it enjoys, there's actually a really big mismatch right now in terms of who's really carrying the load for the fiscal side of things. So I think that's something we can explore next. But yeah, like inflation is almost like it's a backdoor tax, obviously. And if you bring it to the front door with the demurrage tax, essentially, then it allows for price stability. I put it that way. So if you don't want price stability, you get inflation, then you get big government, and you have this constant cycle of increasing debt until what? Where's the end game for where we're heading right now? So I
So
think,
connect the dots for me on the why a policy of targeting a small but positive inflation rate, what's the causal chain that then almost certainly leads to big government, big deficits, and
right,
then running up against fiscal boundaries?
right. So I think like first you start at the fiscal side and you look at, the way that the amount of spending you have, the US government has an extraordinary obligation to keep growth going. And so you have, you have the natural real economy that can grow, but you also have the growth that comes from interest rates. And, when you're printing money and you have inflation, you have interest, then there's a natural cycle where the economy actually has to expand regardless of the supply and demand equation on the real economy. There's a systemic compulsion for the
Just
economy
because
to
the
grow.
amount of debt outstanding is increasing, even if
Correct.
the interest rate stays constant, the amount of interest
That's
that's
right.
being
It's still compounding.
out. Right.
Right. So that over time creates extraordinary stress on on the economy. It creates this compulsion to grow that's divorced from the real economy. And you get into a point where you have to expand GDP. You have to, it could lead to, more aggressive foreign policy where you have to secure contracts in other countries
Y
or basically to expand the GDP. So like that whole dynamic is a function of this monetary system. And so if you look at revising that, and it also is functional to the roots of Western civilization. And, you have the Greeks like Plato and Aristotle, you have Jesus, Muhammad, Moses, we're all adamant against interest rates. And so, we've developed a mentality that a free market should have positive interest rates. And that's just a normal thing. And it's certainly been a lot better than banning it, interest and usury. We've just obviously seen an explosion of economic growth. But if there's a way, I think that we can explore a way right now that we can actually solve that problem while also solving, this kind of compulsion for growth problem. And I think, the limitation of my thinking and what I've been talking about so far, and, how it's evolved to where I am now is, seeing you're trying to, in this system, you're trying to create money that is a really good medium of exchange. So it's price stable and less good as a store of value. You don't want it to be a better store of value than other assets that have a cost of storage, for example. It creates pricing disequilibriums, and I would say arbitrary power, arbitrary benefits to that system. And so I would say if you take it further and realize that at the global level, the US government is really paying for the entire rule-based order, the economic order, and every aspect of wealth really falls under that. Every aspect of economic activity. If we lose that rule-based order, everything collapses. Something else may replace it, but we have to understand that our house, our property, our gold, all of the our ability to trade freely, all of these things are a function of the military and $1 trillion a year, plus all the other Western governments, right? A couple trillion a year easily. So if you start to connect, I think it's just really important to connect. And this goes back to Adam Smith, who believed that people should pay tax in proportion to what they actually enjoy from the government and to what they actually can. So it's really if we make it a function of wealth on the aggregate and a function of economic spending, it's possible to create a tax paradigm with only two taxes. So you're taxing the total aggregate of wealth and the total aggregate of personal consumption. It only takes like a 2.5% wealth tax and a 15% personal consumption tax to balance the U.S. budget. So that's a rough estimation, but it's really we're talking about taxing unrealized capital gains. We're talking about 50, 60% income tax. Like all of these things, they're arbitrary taxes on that only a working class are paying for. And obviously investors who are successful are paying, but people who have, you can have 100 million in the bank, in assets and not pay a thing. And so I think that's something where if we look at that paradigm, two taxes, extremely simple. You wouldn't even need an IRS or a CRA. You would basically be able to automate the entire tax system at the point of sale and with asset managers or however some kind of piece of software for tokenized assets. That whole direction. So you can balance the budget, and if you can balance the budget, you can have a price stable currency. And then if you can do those two things, you're increasing relative demand for government bonds, corporate bonds as well. In my view, debt obligations wouldn't be considered wealth; it would be considered a liability, and so you wouldn't pay if you lent $100 million to somebody. You wouldn't pay the tax on that. On that loan, once you lent the money, the person who received the loan would start paying the tax. And so the wealth as
It
it
would
moves,
become part of the wealth of the individual that is receiving the loan, and therefore
that's
it would be
correct.
taxed as right, I
That's
gotcha.
correct. So that's a way for you to maintain price stability over time. As an investor, you could lend that money. It could be a government bond, but the idea is that you want government bonds to be the cornerstone of the economy. And
Okay, so hold
this
on,
whole
because
idea.
I think we've gotten way ahead of ourselves because
Okay.
I think let's start with the current tax regime, taxes, effectively just
Yeah.
taxes income, right? How did we arrive on income as the primary taxation mechanism?
I mean, I don't know how we got there. I know, 19, you can point to 1913 and income tax becoming a thing. You have you have the welfare state that's sort of co-emerged with that. In my view, it looks to me like an intentional obfuscation of the obvious. In retrospect, perhaps that's true. I'm not sure. I don't know how we got there. But in the way that I look at it now, it's extremely arbitrary.
It seems like a
And so
streetlight problem to me, right? Like,
right.
it's certainly in the past when the tax legislation was initially conceived, it would have been much harder maybe to conceive of how to tax wealth or tax, think about the Georgism concept of
Yes.
taxing the appreciated value of the land, notwithstanding the improvements on the land. Like there's a number of other different tax regimes that have been proposed. It seems to
Right.
me that income tax was really just, well, we can we can make employers responsible for collecting taxes. The vast majority of income is employment income, and therefore, this is for expediency. This is a way that we can reasonably collect taxes, and all of the
Right.
other ways are much harder. Maybe not even just politically, but just like from an execution standpoint,
Yeah,
operationalized.
absolutely good point. And even I'd say even in the 70s, you had economists asking the question, why, if the entire government system is designed to protect wealth and economic activity, why aren't people paying more? But they still thought capital gains was good enough in that respect. But I think we're at the point now where we just need to get back to first principles and say, look, like we need to tax on the aggregate. People should be paying for the services they're enjoying. And it becomes, once it becomes obvious that it's pretty low tax rates that can make this work sustainably, then we can start to re-architecture the whole thing. And one of the things that I think creates resistance to a wealth tax is it obviously it dampens interest rates. It increases incentives to lend money. And so the whole, and then it, when you have a cost on holding, then that affects the banking system as well and deposits. So it'd be the opposite of today, where banks, are getting paid to put their money in the Federal Reserve. It would be the opposite unless there's some sort of a lending system where, if they deposit, then it's a zero rate situation for them. Yeah. So I think like that's how my thinking has shifted, is that it's become more macro. And instead of trying to fix money and try to make it the same as other goods that have a cost of storage or have, sort of a decaying component to it, there's sort of some kind of a compulsion to bring it to market. Whereas in money, there's a benefit from holding it back. You get paid interest.
Right.
So
So there's sort
that's
of a perverse incentive regime
yeah,
under a labor taxation framework, right? We're disincentivizing um, more work at the margin.
mhm,
Um, we're also incentivizing the hoarding of high-powered money at the banks.
yeah,
Um, and also, it's not in alignment with the value that citizens receive from the government, right? So, so we've got this, let's call it
yeah,
the rules-based order, right?
yeah,
So someone needs to enforce that rules-based order. There's a cost to that. How is that cost funded? Currently, it's funded using labor income, right? But and if we change it, then the new regime, whatever that looks like, will also need to be funded, right? And we'll have to figure out how to fund that. But
right,
labor income and the current monetary and fiscal framework is not. It's full of perverse incentives, disincentives, et cetera. And rather, what you're proposing is a monetary and fiscal system that is directly aligned with the interests of the citizens that it serves. So maybe just outline
correct.
that in as explicit a way as possible.
So the way that I would say it is, let's just frame it in today's terms. Trump just got elected. Elon Musk and Vivek are going in, and with the Doge, and they're the Department of Governmental Efficiency. And so like there's really a renewal. There's a moment where there's a mandate for things to change. and for government to clean up. And I think that we're at a point where we're either going to drift off and China China will gain in relative power, and we're going to lose our purpose, or we can really go in and start to really, as you say, like make things directly accountable, like basically pay for what you use. And if we have that sort of a direct connection to everything, we're basically creating, a fusion economy where it's just regenerative and can keep going and has an extraordinary stability to it. So to be explicit on that, I think, you have those two taxes that are automated into the system. And what that would happen is the wealth tax would essentially would increase the incentive to lend money and to move wealth from sitting there, appreciating through inflation and through other mechanisms, and to essentially incentivize or penalize hoarding and to incentivize the real economy. So you want to basically shift it from freeloading to really creating. And if the more that the wealth tax can be explicitly designed to create a zero interest economy, so you can actually solve the problem that Aristotle laid out um, thousands of years ago, where you can actually, you could really have the wealth tax be the price for what could be a variable pricing to generate a zero interest economy. So you're solving the growth problem of the economy where you have to compound growth every year and you have exclusive focus on the real economy. So you're really lowering the speculative aspects. And I think that could be extraordinary for the time where we're in with you love to talk about AI and how things are moving. Things are at an extraordinary point where I don't think government spending is going higher. Like if we can restructure and solve sort of the unfunded liability problem, which I think is doable with certain mechanisms. There's smart people looking at that, but if we can solve that problem, it should be more effective, more efficient government spending. And if we can solve the revenue side problem of making it extremely simple to collect taxes and to have it in the aggregate, so we're not penalizing anybody for being wealthy. This isn't Piketty charging 10% wealth taxes. This is everybody paying a low percent of their wealth. Then you have a highly productive economy, highly stable, and you're increasing demand for government bonds and for corporate bonds, which is extremely important. And you're creating a self-organizing economy that has internal mechanisms that are countercyclical. So you're reducing the dependence on fiscal Keynesian policy. So less stimulus and downtime because you have this wealth tax that can keep the economy going on its own. So I think it's an elegant solution, in my opinion. And I think the it sort of is an exit strategy from what Doomberg laid out, because I think you can start to frame this as like we're heading into the singularity, we're heading into this extraordinary time of AGI and extraordinary growth and productivity, and if we can stabilize, this aspect, we can really reframe government to serve its core functions in terms of defense, law and order, infrastructure, basically ensuring the free commerce, ensuring people can pursue happiness and also are protected from others being imposed upon. So, inherent to globalism and, inherent to capitalism and to democracy is they're anti-colonial. And, all of the founding fathers, despite the negative aspects of slavery and everything they're emerging out of, they're, Adam Smith, they're all anti-colonialists. And so like, this idea that, we need to get rid of capitalism to sort of decolonize, or this idea that we can solve the problems with socialism is absurd. We need to have a more functioning, basically free market economy that's basically more like Adam Smith. Nothing I'm saying is different than what he called for in 1776.
So you mentioned that if we keep going down the current path, that the West is it's possible or perhaps even likely that the West will begin to go into decline relative to China, or perhaps will be less well equipped to balance the rise of China. What is China getting right in terms of fiscal and monetary policy that you think might allow it to strengthen relative to the West if we continue on this path.
Sorry to interrupt, but I did want to take a quick second to remind listeners that while we do absolutely love providing our audience with world class guests and weekly investment insights, we wanted to remind you that we actually do our best work outside of this podcast. And we try to do this by providing cutting edge, globally diversified, and systematic investment strategies that are designed to be broadly non correlated to traditional equity and bond portfolios. So we actually manage private and public funds, as well as bespoke, separately managed accounts for investors that seek the potential to smooth out portfolio returns in the long run. So if you do want to see that theory that we've been talking about put into practice, please do go ahead and check us out at investresolve.com. Now back to the podcast.
Well, I mean, they're really, we're becoming a multipolar. It's going from a unipolar superpower to a multipolar world, and it really. And what I mean by that is not in the classical sense of the U.S. is losing power to everybody else. It's becoming more of like a bipolar, I should say, system where China is, becoming obviously the industrial base for the world, and they're doing that by suppressing domestic wages and welfare, and making things cheaper than anywhere else. And so it's the anti-America, which is really based on speculation and financialism and Wall Street. And so you have these two unreal aspects that are completely at odds with each other. But China would love for this to go. I see people who think that China is about to invade Taiwan, I think are misguided because they're benefiting from the system where they're really developing an extraordinary industrial base. And that's obviously the source of geopolitical power, which the US enjoyed in World War II. So I think that the relative benefits to the manufacturing base they're creating is more suitable for a real productive economy that we're talking about, that the potential to create than the speculative economy that we're running on fumes with, that's fueled by debt. So it's upon us, it's really incumbent on the West to wake up. China, has their issues, and they're probably entering a period similar to the Japanese deflation, where they're unwinding this giant bubble, which will take years. But I really think that we need to um, solve it ourselves. The West has the rule based order, and we have the ability to change the rules if we see fit. And I think it's time to really, really evaluate that.
Okay. So walk me through the mechanism by which we migrate from, as you describe it, and as I've described it on many occasions, a financialized economy that is largely driven by speculative assets, speculative bubbles, um,
Yeah.
to more of a real economy, right? An economy that rewards hard work, increases in productivity, um, the
Solve
actual
problems.
generation of capital in its classical sense. How do we
Yes.
get from A to B?
I think you go in and you reform the tax code, first of all. I mean, I think it's essentially that simple. You digitize assets, and you simplify the tax code to two taxes. And then you basically, I think that ultimately you want to target 0% interest. I think that's how you optimize for the productive economy. And that there's a reason to do that. And the reason why is because right now you have the monetary system. If you, it's hard for me to explain but if you don't have, um, if you have floating interest and you have sort of the US as the global reserve currency, then there's a ton of discretionary policy that's involved in that, right? Like, but nobody else wants that rule. The G20, BRICS, they're not talking about, they don't want to have this arbitrary system that the US has right now. So we're trying to create a system that's price stable. And so if you want price stability, you have to have a mechanism that allows to prevent deflation that, Wolfers and others talked about. So that's internalizing the wealth tax. So you internalize the wealth tax. That includes not just money, but also, financial assets, land, property, and commodities. And so that starts to move. That reduces government spending. everything can become digitized, perfect for AI, and AI can start coming in and increasing productivity, lowering the cost of running government services. And so you have some deflation in that respect, but you also have a more real economy emerging where you have an explosion of creativity where everybody has access to AI to help solve real problems in the world. You know, and I d- I think that the other aspect that we sort of um, moved on from, but it's really critical that we have the more digitized the economy is, the more that we can have real time pricing, data feeds, basically automated policy. And Milton Friedman talked a ton about basically having rule sets for monetary policy, and he advocated for a fixed money supply. And Bitcoin, in a way, adopted that. Obviously, it's nothing close to price stable to really function as money, but that was the idea that he wanted, he envisioned. And so, if you have a 0% zero interest economy that's price stable, then it really mitigates a lot of the discretionary policy that's even possible. The wealth tax essentially can become a countercyclical measure that can increase when you need to move the economy more during a recession, and can decrease in boom times. So it can be it can automatically offset, and the VAT can just be programmed to constantly um, balance the budget. So you could have two variable rates on these two taxes. But I think that allows us to start having conversations globally where, essentially you have a platform like this for every country. I mean, it's not arbitrary. It's really difficult to create global monetary system regimes when everybody has these arbitrary rule sets, arbitrary taxes, arbitrary spending, China subsidizing the industrial base, they're depressing wages. We're doing the opposite. So if you want a level playing field, this is the sort of thing on the aggregate that can really be non-arbitrary and achieve it in a pretty elegant, simple way. Like it's a simple piece of software. It's a protocol, So that's really, I think I'm working on developing that now. And this is a great opportunity to really to flesh out these ideas. Um, but yeah, I think it's more of an intention and understanding that the technical difficulty is not, there's really no piece of this that's extraordinarily hard to do.
Yeah. No, I mean, it makes intuitive sense that those with greater wealth benefit to a greater extent from the government's intervention in protecting that wealth, and that we all benefit from the government's intervention in regulating private property rights, personal safety rights, the rule of law, et cetera. And to that extent, we all as citizens, we pay tax on consumption through so I assume the VAT is that a consumption tax, or is that directly taxing production? How would that work exactly?
Well, in this model, it's simply a 15% value added tax on personal consumption. So,
Right.
it just basically just doing the math on aggregate personal PCE, personal consumption in the US, and, essentially the 2.5% wealth tax, excluding debt obligations, plus a 15% value added tax on personal consumption balances the 2023 budget.
I got you.
So,
Okay.
slightly varies in 23, those numbers go up every year, spending accelerates, but it's essentially doable. And the minute that we understand that it's doable, then everything changes. We can really shift our focus into price stability, and the wealth tax is already the solution to price stability in the sense of it being anti-deflationary.
Right. So the idea is that the um, wealth tax will decline during recessions because I guess asset markets will deflate, and then and therefore as the wealth tax declines, less money is coming out of the private sector and being recycled back into the public sector.
Mhm.
Um, and the VAT, you're not actually talking about changing the rate of the wealth tax during recessions, or the rate of the VAT during recessions, and then increasing them during boom times. Are you? They stay constant, or is there some kind of dynamical? system that will dictate how those rates are set.
Well, I would say two things. I mean, first of all, the fiscal piece is essential, and I think the second piece is more speculative. So I don't want to tie them together. I think it's
Okay.
important to understand the fiscal can be solved very simply. And so, with those two taxes, those can be fixed rates. They could be variable based on spending. So, it's a constant balanced budget scenario that would be extraordinary for bonds and for faith in the U.S. government, for any government. Um, but then this other piece of solving, the usury problem that the greats of the Western world have identified. And that, if you want to solve that, then yes, it would be variable. It would effectively be the pricing on, you would basically have a zero interest economy. And then the wealth tax would basically be the price you're willing to accept the loan at zero interest. So it would be constantly fluctuating based on people's willingness to borrow and to lend.
Right. It'll be like a discount
So
rate on like discount bonds. Yeah, I got you. Okay.
yeah, yeah. So yeah, so I mean, it could be either, and I don't want to lose. The second is more speculative, and I understand not everybody's going to understand the value in a zero interest economy. I think it's going to be essential for a really viable global framework. But just knowing that we can solve the fiscal problem first is really important. And then the second thing I would say is, despite all this talk at BRICS on, a new currency and a basket and gold and all of these things, they don't want to absorb the cost the US is spending right now. Like that's an extraordinary function. They're enjoying the benefits of the current system because, the US they're basically everyone's free riding on the US, the entire global elite, um, BRIC countries, we're all sort of enjoying the benefits of what they're paying for. So I think that it's time to get real about all that, and I have a feeling that the new U.S. government's keen to do that.
Wow. Let's flip to AI, robotics, automation. Um, where do you stand on whether AI, automation, robotics is going to profoundly change the nature of labor markets? Um, you know, uh, Rapidly put many people out of work before people can be retrained to do something else that might be useful. Um,
Mhm.
and then how does your way of thinking about funding the government's liabilities play into that scenario if you feel that that's possible?
Yeah. So I mean, I would agree with the question. I think like the way that you're framing that is absolutely correct. And my approach to it is that we don't know how things are going to be disruptive, and I think we might not even be able to conceive of how disruptive it's going to be at some point. There's going to be some
Right.
inflection point where it becomes, PhD level in everything at once, or, even beyond PhD level at everything at once. And when you combine that with the operational side of automation and robotics, it's it's remarkable. It's ridiculous, really. And I think the exciting piece of that is obviously the productivity boom, the creativity, the problem solving are going to be off the charts. Wealth creation will be off the charts in ways that we can't even imagine. We're starting to
Mhm.
see AI bots trading, making companies. Is it? I don't know if you saw. What is it? AI 16Z. So it's like the Andreessen
Yeah.
sort of an AI
A16Z.
bot based. Yeah. So it's basically an AI that's kind of like pretending to be a Mark Andreessen. I mean, and going out making stuff, investing. So it's like I think it's just off the charts, and so the disruption is for sure. Um, using the ability to use AI to solve problems is going to amplify our abilities. At least by an order of magnitude, maybe two. I
Mhm.
think we can't even imagine. So things, in the next 10 years, I expect everything to run extremely smoothly and things to work. I think the disruption in that time frame is very uncertain but highly probable.
Yep.
Um, and I've always believed in a UBI for two reasons. One, it allows us to solve sort of the unfunded liabilities. I think that social security and uncommitted aspects of the welfare state that really disincentivize work, um, that have a really negative incentive. I think UBI is relatively better in the sense that it's the least worst option for, maybe everybody can earn a UBI that's across the board, where so it's not arbitrary. We can all sort of have the basic needs paid for, not something that is luxurious, but basically enough to have shelter and food, just for survival, and then being able to build on that without any disincentives,
Well, why
which
wouldn't it be
welfare
some
provides.
fraction of the economic output? So if the
Yeah,
economy is growing extremely quickly because of total factor productivity, then, to what extent should the citizens benefit from that growth, I guess is the
that's it.
question.
No, then I think you just provided the answer, and I think that's exactly right. And we probably should have done that for the free trade agreements,
Right.
for basically China entering the WTO. We really should have had that in place in the '90s, I would say,
Yeah.
because obviously the set the misalignment between the winners and losers, and the losers got nothing. You know, May if they're lucky, they had welfare and no reason to work, which it has its own set of problems. So yeah, I mean, that's exactly right. And the beauty of what you just said is that that really provides a global framework, right, for a level playing field on global trade. If everybody has the same, roughly the equivalent GDP, I'm sorry, UVI based on GDP or global output, on productivity, then you have the same relative floor. So like you solve that problem where China's suppressing wages and welfare, versus relative to Germany, for example, so that the cost of production's exponentially lower. You can at least start to have a framework that's automated just based on a percentage. The data feed goes in, it self adjusts, people get more money.
Right.
And
So
it's
if the
it's really
capital
it's really a fair
classes
system.
are if the capital owners are benefiting from offshoring and hollowing out the,
Right.
manufacturing base, high paid wages are being siphoned off to China where you're getting the same work done at a fraction of the cost.
Yeah.
That's now accruing to the capital account. Then that then gets redistributed because the entire economy is benefiting from that. And therefore, those who are losing their jobs to this offshoring are not, it's not totally punitive. They are sharing in the global synergistic um, outcomes of globalization.
Yeah, you're absolutely right. But I think the main thing is that price stability, the ability for every country to anchor prices, is what really provides the global framework, a new monetary system, but also for balanced trade. So that provides a framework for relatively fair competition on trade. And then that's just one aspect of that where, even fiscal spending, you can just basically clear out all these, welfare programs across the board, have a UBI. And so you have like across the board, you have sort of a solution to that problem that's, relative equivalent per the strength of the economy. So yeah, like it doesn't solve the trade imbalance problem, but it does solve a, an aspect of how to align nations in, sort of a new productivity centric economy.
Right. Um, I mean, one of the issues that obviously we will face with this is that, as you alluded to earlier, you've got the opportunity for jurisdictional arbitrage, right? You've got the citizens of
Yeah.
one country who don't like the tax regime being enforced by that country, and therefore they move to some place that's more tax neutral or favorable to capital, or however
Yeah.
you want to position it. Um, I guess the point you're trying to make is we need we need to globalize the tax framework in order to allow for the equilibration of trade policy and make globalization work for everyone.
Totally. And it's a really astute observation. But I would say, the US is already looking at, there's already policymakers out there that want to tax, um, sort of foreign investment into the US. The way the mechanisms work now is obviously the money returns back to the US dollars, recycled back into the US into financial assets um, at the end of the day. And so you want to tax, people are talking about taxing that money coming in. So there's already that incentive. So imposing a wealth tax in the US, you could start it there and you can make it work fairly easily, simply because that money does have to be recycled into the US already. And I think, the US has to lead on it. And there's no question in my mind, when you talk about a global framework, if it's not led by the US, it's going to be a net negative for the world.
Right.
So I want to see America solve its problem, upgrade the West, counterbalance the East. And so that's really where, we want to see America lead this. And I would say whatever's in their interest, I would like to see that be the natural evolution of it versus like having it happen to, or,
Right. Yeah. Yeah.
have
Yeah.
it because of whether it's a debt crisis or, whatever it is. I'd much rather see them be on the offensive.
Yeah. Um, digitization. I think you've written a lot about digitization, decentralization. Um,
Yeah.
Give us a little bit more detail about that. I mean, are you advocating more for sort of a central bank digital currency, a globally orchestrated, government controlled type currency?
Mhm.
Um, are you more of a Bitcoin maxi?
Yeah.
What seems like the right, most balanced solution here, from a digitization, decentralization standpoint?
So I think it's government bonds that has to be the cornerstone. And I think that, you want to maximize um, the strength of demand for bonds. Um, and not arbitrarily or through stupid rules, but just by simply having a strong, sound economy, with basically the ability to balance the budget, efficient government, and then you're going to have strong demand for bonds. And so that's to me the basis for any new monetary regime. If you have basically the ability to maintain price stability and strong demand for government bonds, you really don't even need, a fiat monetary system. You could have a decentralized currency board. You can have a currency board with like these clear rules that, money is used as the medium of exchange and nothing more. But I don't I'm not sure what I'm saying is, it's just simply a monetary board, something like the Cayman Islands has a monetary board based on US dollars. Argentina's adopting US dollars. It's the same idea. It's an indirect monetary board where basically the underlying asset would be bonds and anchored to a price, whether it's a CPI or some kind of basket of commodities or whatever, whatever. I think sort of you can have an aggregate real time inflation index when you digitize everything that I'd like to see. But the idea is that you have that becomes that real time inflation index is essentially the pricing mechanism for money, and the government bond to be the collateral, and you have a decentralized currency board where the asset is redeemable. So you have a US dollar created with the bond and it's redeemable. So like there's really no fiat system where it's M2 and you have to perpetually create this demand. It can be really a stable system that allows that would be optimizing for allowing any kind of competition. So any kind of decentralized currency, Bitcoin, any of that can compete with. There's no fragility in a currency board as long as you have fiscal solidity and basically all these mechanisms that I'm talking about. There's really no reason why we can't have extremely the Federal Reserve could essentially become an automated system. And yeah, like there would be such stability you wouldn't need to suppress Bitcoin or the demand for any other competing option.
Right. So the global currency board would, um, I guess the idea is that a government would sell a bond to the currency board. The currency board would then create a unit of currency to buy the bond, and then the currency board would sell the bond into the market? I'm trying to
Yeah,
figure out the
pretty, yeah,
mechanism whereby.
pretty, yeah, pretty much. So the difference is that, with money, you're paying the wealth tax and with bonds, you're not. So the only real use case for money is for as a medium of exchange in real time. Even that's arguably not even necessary, you know? Um, so holding, it really comes down to if there's so much demand for government bonds that you need to hold money or you want to hold money because you don't have any alternatives. But that's essentially the mechanism where you have redeemability. So the minute you don't want to hold the dollar, it's converted back into a bond, and that can be exchanged for anything else. Like, you're basically creating a perfect digitized ecosystem where anything can be traded for anything in real time. We're not talking about a slow system. We're talking about, automatic convertibility.
No,
Um, you know,
that's I think the
you know,
missing, or one of the missing pieces for me was, so the bond, holding a bond, the bond doesn't count towards the wealth that's taxed.
correct. It's a
But it,
liability.
but if you hold cash, well, okay. So, but if you were the one that bought the liability, does that show up on your balance sheet as an asset, and therefore you're taxed on it?
It's going to show up as under standard accounting principles, it's going to show up as an asset, but you're not going to be taxed on it as a liability. You're basically sending the money to the U.S. government, so they'll be taxed. They'll essentially.
Okay.
So
What about,
the
for
dollar,
example,
basically the dollar is programmed to absorb the tax, whereas loans are not.
and what about wealth held in like real estate, or equity markets or what have you? Is that all part of total wealth, and included in that 2.5% wealth
It
tax?
is,
Okay,
yes.
so really only government bonds are excluded.
Corporate bonds would be excluded as well.
Okay, corporate bonds
Yeah,
and
you're,
kind of,
you're the general shift will be towards more emphasis on productivity. It'll be more secure for corporations than it is today because they're so dependent on fiscal spending. There's so much insecurity at the corporate level to grow, and to, the speculative side of things, but also the dependence. We have so many ESG cases where you have to be ESG compliant. Like, for example, in the European Union, where if you want to get bailed out, if you want to get bonds purchased or supported, or there's different mechanisms where corporations are on life support because they do survive because they're ESG compliant. So there's an entire ecosystem that's totally unsustainable right now, and I think that this will provide a more robust architecture for business debt, but also for the kind of sort of the continuance and the certainty of demand to be there. Because when you have, you're going to have less boom and bust cycles when you have this total shift towards the real economy. You're not going to see this massive spikes in digital and in the value of assets that we're seeing now. I would hope. I would hope that, it's much more based on use than it is on speculation.
from your lips to God's ears, I guess. Um, so what would be the first signs that you would be looking for that decision makers were beginning to move in some of these directions?
Streamlining the taxation. I think if you begin to get serious about balancing the budget, that's when you're starting to get serious about the monetary, because the Federal Reserve is simply responding to the conditions of Treasury, fiscal spending, lawmakers, global economic conditions. There's the independence that they have is the independence of their model. It's not really the independence of doing whatever they want. They
Right.
have a model. They basically input all these other decisions that are made elsewhere into their model, and have, it's almost an automatic. People think of it as arbitrary, like I'll wake up today and it's going to be an interest rate rise or not. And to some degree that's true in terms of, timing, but the overall framework is extremely non-arbitrary. And thank God for that. We wouldn't be this far if it wasn't a lot of smart people working on that. So um, that would be my. It's not the Federal Reserve, I think, that's part of this. Like they're more downstream, in my opinion. I think it's more everything else. When we see Treasury and and the policymakers actually getting serious about fiscal reform, unfunded liabilities, and supporting digital assets, we'll know that there's sort of the shift away from the big spending Keynesian model, which the Paul Krugmans and the some of these guys that think everything's going great. So we have to unplug the economy at some point. We just can't keep spending. So like we have to figure that out. And I think we have a pretty decent chance with Elon going in. I'm hoping he sees this to some degree, and we'll go from there.
Great. What are you working on at the moment? What's your current project?
Well, I'm working on basically what we're talking about, how to create a protocol that's basically a Milton Friedman type set of rule sets. Like this is what happens under certain conditions, and how to create something that is pretty much automatic and neutral, and would be acceptable across different countries could find that acceptable. So I'm starting to think on that in terms of an open source protocol that could run on Ethereum, and then just working on a private instance of artificial intelligence, so that users can own their own data, and sort of a user centric version of that, and working on another book, but that's sort of a secondary at this point. I would think it's great to have this conversation, and it's really enjoyed it.
Yeah, me too. Are there any influential decision makers that have been paying attention to some of these proposals? Or are you seeing any publications that matter publishing on some of these ideas?
Well, I mean, look at Besant. I'm not sure it's official if he's been selected yet, or if he's still. It's still is it official that he's?
I don't know, but I certainly know it's
Yeah,
been discussed. Yeah.
he's he's been floated, and he. I mean, in June, I think it was, he was interviewed, um, and said that he really thought it was time for a new monetary regime, and he wanted to be a part of that. So he was sort of moving in that direction months ago, if Trump was to win. And I think when you start to think about, if people are getting serious and talking about a new regime, a new monetary system, there's only so many ways that you can make that work. Um, otherwise it's just it's just the next US. Does China really want to do this again, where speculative economy, but they financialize the world, and that, I don't think that really is what they want to do.
Yeah.
So I think I already think that the conditions are there for, you know, a, a shift towards the real economy, and towards a more stable economy to handle the singularity, to handle, the explosion of AI that we're about to face. So, yeah, I mean, I think the signs are there. I think monetary experts have been looking at some of these problems, and they're looking to innovate on the blockchain, and so that tells me digital assets. That tells me they're innovating. Again, I think unless you're big Keynesian, MMT, and think that inflating your way out of this is the answer, then I think you're looking at innovation, and to me, I'm seeing a lot of people doing that.
Yeah. I mean, I also have been digging into Scott Bessent's policy descriptions, I guess, his publications and his appearances. And mm, yeah, he seems to have an interesting approach. He definitely strikes me as, if I had to sort of classify him as in a school, he would be sort of Reaganomics, certainly a very
Yeah,
strong proponent of supply side policies. I don't know that I would characterize what he's describing as um, reform. I think there's a lot of tariffs and lowering taxes for corporations, lowering taxes for the wealthy, cutting spending. So we'll see. I think I'm much more of the view that we need a complete reconceptualization. It's like what we're realizing is that the incentives are now almost all perverse, and so you've got to keep adding
Yeah.
degrees of freedom to the model to kind of plug the holes and keep the thing spinning. But in reality, what you need is to rethink the entire model to align it with to align incentives with what we want from the economy and from government, and establish a completely new social contract um, with the private sector. So
Totally agree. And like the other thing, like look at Judy Shell's nomination to the Fed. I mean, she just wrote a book about price stable money. So, that's a huge sign. The fact that that was Trump's, pick last time around, that she's been considered again this time. That tells me that he's interested in that direction. He wouldn't be thinking that unless Xi and others were thinking that way. I think it's, pretty clear to me that they China pretty much said it in 2010 to end the speculative bubble of the financial system, price stable money. They called for a new Bretton Woods, a new Bancor system. Basically, they saw the Keynesian Bancor system as a missed opportunity to have a sort of a clearing to balance trade. So
yeah,
I think it's already in motion in some ways, and it's more for me right now. How do we get ahead of it? How do we lead it rather than be reacting to it? And,
right.
so I think, yeah, I think that that's the essence of what this discussion hopefully is.
Yeah. Well, where can people find you? Where can they find your work, and where can they find you online?
New Currency on Amazon, bookstores, and also New Currency is my handle on X as well. You can find me there.
Great. All right. Well, listen, thank you very much for coming on and sharing these, I think, relatively novel points of view on a way out of this quagmire that we, I think, are all coming to the fast realization um, that we are all facing, or that we've all become entrenched in. And I look forward to seeing some of the ideas that you've been promulgating come to light and be
Thanks,
adopted.
Adam. Definitely appreciate great conversation. Thank you.
Thank you.
I did want to take a quick second to remind our listeners that the team works really hard on these podcasts. We spent a lot of hours trying to get the right guests, and we do a lot of prep work to make sure that we're asking the right questions. So if you do have a second, just do hit that subscribe button, hit that like button, and share with friends if you find what we're doing useful.